Our next guest thinks there's still room to run in the market. Here with a few stock picks from the index is Cole Smead, portfolio manager at Smead Capital Management. Let's get it on.
That's better.
Let's get it on. How are you?
It's better.
Good morning to you,
Doing well. How about you guys?
We're good. We're getting ready for the Super Bowl of retail, which is taking place later this week. I don't think you have any retailers on your list of stocks that you're picking this morning, but maybe we can get into that in just a bit. But I did want to talk to you about some of the things that you think are working. Your top pick right now is Merck. It's already up 12% year to date. So I wanted to sort of get an understanding of why you felt the way you do.
Yeah, with Keytruda and their oncology work, we just think there's great legs to that, and we're very early on in that process for their business. And a lot of these pharmaceutical businesses are coming out of just a very tough period. You know, we don't own it, but just as an example, some of the settlements in the generic space, you can kind of see a thawing process going on in a little bit of the sediment, and that's just tied to politics, legal battles, et cetera. But they've been great businesses, and really going back 4 or 5 years, a lot of these businesses haven't made much new highs because the fallout of the Valiant world has still been kind of coming about for 4 or 5 years.
So, Cole, Mark is sitting right now at 86.15.
Yeah. If
we had this conversation next Thanksgiving, what's your expectation of where it sits?
Oh, I'd love to tell you it's at 120, but I don't get to know the future as Keynes or Buffett or Annie Duke or anybody else would tell you. We do know that their earnings power is really strong, and I think that's the big difference between this market or the indexes that you're talking about and individual stocks. The E of the next 10 years is going to be where all stock returns are. The multiples are not likely to help stock investors over the next 10 years in comparison.
Let's walk through some of the other picks you got. One on that list actually has been there's been a bit of speculation of a buyout in this category. Walgreens Boots Alliance.
Yeah. Yeah, these are old lovers giving it another go. KKR and Stefano Pessina, their CEO and largest shareholder. The street has so much egg on their face with this stock. I kind of feel bad. It was like a high schooler got a carton of eggs and just started throwing it at the analysts. And they were all bearish. They had terrible views of the future at 10 or 11 times earnings. Now with a financial buyer like KKR coming to the party with Stefano owning 16% of the stock, now they're all pulling a mea culpa, but still digging in. None of the analysts have got around this idea. That they all say it's not going to work. And the financial community, the journalist community, has said this is like Texas Utilities, the TXU buyout. It's nowhere near that. It's not a regulated utility. They make way bigger margins than a utility. And they have a 16% owner that is taking these talks with KKR, who he's done that with before.
Right.
By the way, since Becky's usually talking to Buffett, I will not be shocked if Buffett is stepping into the preferred with warrants or possibly even equity on this deal. Because it's got a lot of the franchise opportunities that Buffett likes. And let's just say the deal goes sideways for Buffett and he has those preferreds. Well, congratulations, he might become the owner in that situation.
What?
Because he'd be if he's sitting in the debt structure in any form, he could become the owner if the deal goes bad for the people owning the equity.
But
right?
why do you think this is something that would appeal to him?
It's a great American business, very consistent earnings power. And the biggest question on the business is, how do you want to price that growth, not what is the growth of the business? And use the Teva lawsuit conversation yesterday as an example. We've been in an era where there's been a slower number of generics coming to market. And what that does is that's the single highest margin thing that a Walgreens store sells is a generic in the back of the store. It's 38% margins is what it's typically been for them. That's the biggest margin thing they sell. So if we have fewer generics coming to market because of lawsuits on the generic side or less new drugs to roll to generic off patent, that tends to slow the earnings growth.
This is just totally outside his wheelhouse. I mean, why would he buy a drugstore? It's not something he's been involved in the past.
Becky, people are saying that
Healthcare
Oxy
stocks aren't something he's been involved in the past.
Well,
I mean, do you know anything, or
it's
you're
a
just kind of
drugstore.
speculating because you look at it?
No, I'm just saying the kind of business, the kind of profile it has. He'd be a white knight to Stefano Pessina, kind of like KKR's being. But Becky, people are making the same case right now that why is Buffett buying Oxy? That's not really one of his kind of businesses. But price, And what he thinks he's getting for that is playing into. I would not be shocked in Oxy's case if they own another $3 billion that they're reporting their 13F.
Right.
They bought $300 million worth
in the latest filings that they showed, but that wasn't until after they'd already been offered the deal to step in and finance.
Right. I see where you're getting. I see Barron's just wrote a piece. I don't know how it looks recent.
Yeah, I think it was Andrew Barry wrote that piece.
For a big acquisition, he should buy Walgreens. So I understand the speculation that you're raising here. Yeah. But I think at this point,
not needed. That's not needed. Yeah, they don't need that to have this deal come together. KKR and Pacina, they bought out the Boots Alliance part back in 2005.
Right. But that Barron's piece, I think, was just a pure, almost a suggestion. In fact, it starts saying, Warren, here's your elephant, meaning like here's an idea.
Correct. But I'm not saying Buffett's going to take equity, but all his deals right now are preferreds with warrants. That's exactly the kind of risk profile you'd want in a buyout. You'd want to take preferred with warrants because that way, if it works out really well, you have immense upside. That's exactly what he did on Oxy.
Okay, I want to talk about another pick you have. By the way, it's a company that Warren Buffett actually has liked for quite some time. American Express.
Excellent business.
Has been in business since 1950. What's the future of Amex? By the way, we had a conversation earlier this week about how much money the company is spending. The Wall Street Journal had a piece about how much money they're spending to attract merchants, in some cases giving these incentive fees that won't pay off for 5, 6, 7 years.
Because they know there's a ton of 35-year-olds like me, Andrew. It's 40% of millennial card use is coming out of Amex right now. So why are they going at merchants? Because they want to entrench themselves with the customers. When Sapphire came at them and J.P. Morgan took that shot, what it did is it really woke up American Express, because that was after the Costco deal had rolled off as well. It really caused them to look and say, how do we get close to our customers? How do we bring them to our business? So the Uber deals and more flight opportunities and all that kind of stuff came about. But that's because their competition caused them to get in better shape. And it's worked wonderfully if you look at what the stock's done the last few years, exactly what people didn't expect coming out of the Costco disagreement. And I think this is all just, they have the ability to do this because Visa and MasterCard can't pay those kind of fees because they make such a tiny fee on the interchange versus Amex's good customers. They're making 5 to 6% on card transactions.